Hello guys, welcome to SammybrainFx. So in today's video we are going to be doing a breakdown of our trade, the trade we took on volatility 75 index. Okay, if you're new to our channel, please do well to like our videos and then of course subscribe to our page. Thank you. All right, without further ado, let's dive in. So looking at volatility 75 index, look at the chart before us. Okay, so what do we see? We see that going to a higher time frame. Let's go to a 4 hours time frame. So on our 4 hours time frame, looking at what price, the behavior of the price, how price was moving. This was our swing low, our previous swing low, and this was our previous swing high, our previous low and our previous high. So this is our trading range. Okay, so now what did we see? We saw that after price formed this high, there was a break of structure to the downside. So there was a break of structure to the downside. So what did we do? This was the zone that caused that break of structure. Okay, this zone triggered the break of structure. So coming down to our 2 hours time frame, let's see if we can refine our zone further. Now there was actually nothing to refine here. Okay, still the same zone. So price came in, it broke structure, it took out this previous low. Okay, it created a new low. So meaning this zone that caused that break of structure, we're expecting price to come in and tap into that zone in the future before going down again. Remember, so when price came into this place, okay, we saw something here. There was an equal low, okay, liquidity, okay. It actually means when you see these equal lows, it means price in the future is going to come in and take out that low. Okay, so we just saw that and we marked it. So this is our zone. So let's see if we can refine this our zone further. Okay, now the essence of we refining our zone, okay, refining our order blocker, supply zone or other demand zone as the case may be, is so that we'll reduce our risk, increase our risk to reward, okay, ratio. Okay, that's why we always go down to that's why we always refine our entries. Okay, that's why we always refine our entries. So that's why I always refine our zone rather not our entry. Okay, all right, so this is the 2 hours. So let's go down to our 1 hour. Let's see if we can refine our zone further. Now coming down to our 1 hour, there actually nothing to refine here. Okay, there was nothing to refine here, so the zone still remain the same zone, and that's our order block. So we waited for price to come in. So price came in and tapped into our zone. So after price tapped into our zone, what did we do? Okay, what did we do? We will have to go to a lower time frame to look at for our entry. It could be the 15-minute time frame, 10 minutes time frame, 5-minute time frame, or 3-minute time frame, as the case may be. All right, so now price having tapped into our zone, let's go to our 15 minutes time frame to see if we will spot any entry. Now coming down to our 15-minute time frame, we saw how price came in, tap into that our zone, but there was nothing clear to have made us to take this trade. So coming down to our 10 minutes time frame, let's look also. Now coming down to our 10 minutes time frame, also there is nothing really clear here. Okay, we would have still gotten an entry here. Okay, we would have gotten an entry here. Yeah, we would have gotten an entry here. Now this is our entry model. Okay, this is our entry model. It's something like this: a break of structure and then move. So now wait for this kind of pattern where we are going to see price, so this is that our zone, okay, in the that price tapping in the higher time frame. Okay, so this is that zone. So we are going to see a break of structure. Now so price came in, it broke structure. We're going to see a break of structure and then a retracement to that zone that caused the break of structure before we sell. Okay, so this is our entry model. All right, so this is what we are waiting for. Let's see if we can spot that here. Now after price came in, tap into our zone. Now of course price took this previous high, so price came in, tap into our zone. We saw there was a break of structure. This low was taken. Okay, after this high was created, price came in, it took out this previous low. Now this is a break of structure. Why? Because this candle took out this previous low and it closed below it. Okay, this was not just a wick, this was a full-bodied closure below this previous low. So there was a break of structure to the downside. So we waited for price to come in and tap into the zone that caused the break of structure. So in this case, this is remember, this is entry in the 10 minutes time frame. So in this case, this is the zone that caused the break of structure. So this now will now be our order block. This particular gray and blue candle is that order block that was created before this break of structure. Okay, so we waited for price to come in, tap into this zone, and then sold off. So we'll see this kind of pattern here. Okay, now if we go down to our 5 minutes time frame, we would have still have gotten an entry still. Okay, we'll have gotten an entry still. So coming down to our 5 minutes time frame, so what did we see here? Price came in, it broke structure. This is our 5 minutes. Would have still gotten an entry. So price came in, took out this previous side, tap into our zone. It broke structure. This was break of structure. So it's clearer here in the 5 minutes. So there was a break of structure. Okay, this is a zone that caused the break of structure. So price came in, tap into that zone and sold. So you see how we took that trade. Okay, now where was our exit? This was our exit. Actually, this was our exit. Okay, now remember this equal lows that we saw. Remember, it is expected that price is going to come in the future and take out this low, this equal low, take out this down. Okay, there's a demand zone here that we had already marked out previously here. Okay, so price came in. This is actually where we took our first TP was here around this zone, and then our second TP was this particular zone. Okay, now price that would still likely going to come in and tap into this zone, but we are not greedy. We are waiting for it until we get to this place. Okay, so we took out our first profits here. I took out the second one here. Okay, we didn't wait, but price might likely come here. Okay, so price might do something like this. Okay, we might still likely see something like this, price coming in, tap into this zone, and then it goes back up. That's what we actually looking at for. Okay, but this is simply how we took this trade. Okay, remember, you're not greedy. Don't be too greedy, because if you are greedy, what the market has given to you is going to take it back from you. So be patient. Look out for price action movements. Look out for your break of structure. Look out for the zone that caused the break of structure. Okay, your order block could be your demand zone or your supply zone, depending on your market bias, whether it's sell or buy. And then refine your zone. After refining your zone, the next thing, you go to your lower time frame for entry criteria. Remember, this is our entry criteria. This is a pattern we're always looking at for before we take our buy or our sell. So that will be that for that, guys. So till we see you in our next video. Bye for now, and do not forget to like and subscribe. If you have any question, please type it at the comment section. Till we see you in our next video.